Hi guys, I'm Dan, this is Kai. We are the directors at Crescent Mortgages. Today we're bringing you a complete guide to mortgages for beginners, for dummies. So we'll be talking you through the process that you're going to need to go through, the jargon and what everything means, and just explaining everything from the ground up. So I guess before we jump into it, tell them. We are mortgage brokers, we're not YouTubers, are we?
No, we're not.
So this video is going to be really useful to kind of help you understand the process moving forwards, but it isn't specific advice to your circumstances. So when you are ready to take that jump and start to look at mortgages for yourself and understand what's going to be achievable, you can contact us directly and we can tailor the advice to you. So you can give us a call, send us an email, head over to our website and send us an inquiry, and we'll be in contact with you to talk you through your options. Should we start from the absolute basics?
Go for it. Go on.
Kai, what's a mortgage? How long have you been doing it?
So I guess a mortgage, rarely asked that. A mortgage is a loan secured on a property.
What do you mean by secured?
Secured means if you don't pay the loan back, then the bank or whoever's giving you the loan can take the property off of you.
They can repossess it.
Yes.
Correct. So the bank or building society will secure that debt against your home. You will slowly clear that debt over probably decades, and when that debt has been fully cleared, you will be mortgage free and you will own that property outright. But until that mortgage is fully cleared, the mortgage, that loan, will be secured against the home.
Yeah.
Well done.
Thanks.
Now, I guess the first thing that people need to be aware of is kind of the process that you're going to need to undergo. And we're not just talking about the mortgage process, but let's rewind right to the very start, probably where a lot of you are now. So you are thinking that you want to buy a property at some point in the future, could be the near future, could be a few years away, and you need to know where to start. There's generally a very clear place to start, isn't there?
Yeah.
Why don't you tell them?
I will. Generally speaking, you should start with looking for a broker. That's our advice, at least. What kind of broker? A good broker?
A mortgage broker.
A mortgage broker. Go and find a mortgage broker to talk to, in short.
Yeah, because until you do that, you're really not going to have any idea what's going to be achievable for you. The broker is going to do a few things, aren't they? So they will go through an initial consultation with you. They'll take some information, basic information: what do you earn, outgoings, do you have kids, are you a UK passport holder, have you owned a property before? They're going to get as much information as they can in that initial consultation to basically work out, one, if you can get a mortgage, and then if so, how many options are you going to have and how much you can borrow. Once they've confirmed that, you'll then have a good idea of if you're ready to start looking for a property and what sort of budget you're going to be able to look at. Are we a little bit biased by saying they should go to a broker? They don't have to go to a broker, do they?
No, they don't. They can go to their bank, which is the next most commonly done, I guess. But obviously if you go to a bank, you are going to have one lender's opinion of you, and that bank is unlikely to be the best one around, given there are, give or take, 100 lenders or so in the UK. The chances of your bank being the best one for your circumstances are pretty rare, and brokers generally can deal with pretty much all lenders in the UK anyway. So by going to a broker, you should cover your bank and more. So
they're going to give you the best chance of finding the lender with the best rate, and obviously finding the lender that's most likely to lend to you. Because you might find that with your circumstances, not every lender will give you a mortgage, or some will be more generous than others. So rather than you going from lender to lender to lender, a broker will basically have the experience and the tools to go to the correct lenders to suit your circumstances and get you the best rate, and ideally, find that you can borrow as much as possible as well if you're trying to stretch affordability. Once you've completed the consultation with the broker, and there are other things that the broker will go through, which actually we're going to go through a bit further in the video, but for now, assuming you've gone through that consultation with the broker, everything looks good, and they're confident that you can get a mortgage, then what will they do?
Then they'll issue a little certificate of sorts.
A little certificate?
A little certificate, a little big. It's called normally an agreement of principle.
Okay.
Sometimes it's called decision of principle. Sometimes mortgage of principle. AIP, MIP, DIP.
What does it mean? What does it do?
They're all the same thing, but they are basically a document that says you can get a mortgage and generally how much you can get that mortgage for, so the total you can borrow. And that certificate normally is for you to give to an estate agent when you want to make an offer. Normally. So I can do it, I am serious, here's my bit of paper, I can borrow enough money to buy that property.
And I guess that kind of leads us on to the next point, which is the next step after you've spoken with a broker and you've got that certificate. whenever you're ready, you can start looking for a property. Go and view as many properties as you want in the area that meets your criteria within your price range, which by this point you'll know your price range because your broker's confirmed it. When you find the property that you like, that you want to make an offer on, at that point the estate agent will probably ask to see the certificate, won't they?
Yeah.
They know it's not a guaranteed mortgage approval, but it shows that you have done your due diligence to confirm that you should be good to get a mortgage. You've not just walked in off the street.
Hoping.
Yeah, nothing wrong with hope, but maybe just back it up as well. Once the offer's been accepted, that's when the fun begins.
Yeah, okay.
You'll find that there are kind of very clear stages in the process. Up the point we've got to now, this is all pre-mortgage application.
Yeah.
So you've spoken with the broker, you've got the certificate, you've started your house search, you've found the property. That's all pre-application.
Yeah.
Once you've found your property and you've made the successful offer on the property, that's when you begin the mortgage and the legal processes there. So at that point, you will go back to your mortgage broker when you found the property.
Once you go back to said mortgage broker, at that point they should start putting the puzzle together a little bit and going, right, let's find the best mortgage lender. What type of interest rate do you want? You know, all those lining up to go, who are we applying to? Get the documents in and get on with it, I guess. And that is kind of day one in the mortgage process, if you will.
Yeah, so they'll pinpoint which lender, you'll confirm with them, between the two of you, what type of scheme you go for, how long you want your mortgage to be spread out over, which again we'll come to further in the video. Once all of that's ironed out and they've picked the best lender, picked the best scheme, they've given you the details and you're happy with it, that's when the mortgage application is submitted. Normally within a couple of days of you finding the property. So we try and get that process underway fairly quickly, don't we?
Yeah.
So there'll be two things happening at that time. Number one, you will apply for the mortgage.
Yep.
And at a very similar time, you're going to
find a solicitor.
Good.
So your solicitor you'll need for your mortgage application. Some people try and find a solicitor really early in the process. You don't need to find one that early, but you do need to find one generally before you apply for your mortgage because it will be asked on the application. And quite a lot of people end up getting their solicitor from their broker or maybe another referral of sorts, friends, family. But you do need a solicitor. You need a good solicitor.
Or a solid solicitor.
Yeah, solid. They don't have to be kind of the absolute best around, but you don't want to go too hard on just the cheapest. You need a good quality solicitor who will do a fair bit of the work later in the process.
Bad solicitor can be problematic, can't they?
Yeah, they often are.
They've got a really important role in the process. The mortgage work will normally be done a lot earlier in the process than the legal work. The solicitor is going to oversee the entire purchase, aren't they?
Yeah.
So they do have a really important, and they're ultimately going to be the ones that get you the keys at the end of the process. So
Yeah.
don't pick a bad solicitor. So at that point, you're instructing the solicitor,
Yeah.
you're applying for the mortgage. Now,
Yeah.
to get the mortgage fully agreed, it's not just the initial application, is it? They have additional checks that they need to do.
Yeah.
So we're just going to give a quick whistle stop. I don't want to put a time on it because I do tend to go on a little bit, but a quick whistle stop. So in the UK, here's how you get your mortgage agreed. Number one is the credit check. And that will be done straight away when your mortgage broker applies for the mortgage, for the mortgage.
Right.
So when they submit the mortgage application, the first thing the lender will do is run a credit check on you. You cannot proceed with that application unless you pass the credit check.
Yeah.
So if you don't pass the lender's credit check, unfortunately, 99% of the time, that's the end of the road with that lender.
Yeah.
Their system is saying, we will not look at an application for you, at which point you would potentially have to look elsewhere, or as a broker, we might have to see your credit report to try and work out if there are any problems which have caused that decline.
Yeah.
But assuming you do pass, that's the first thing, is the credit check. The second hurdle, 2 and 3 are in no particular order, but the second one is the valuation of the property. So the lender will want to do a valuation of the property you're buying. It's not a full survey, it's just a basic mortgage valuation. They want to look at the property to make sure that they're happy with the basic condition of the property, make sure there's no major structural problems, and also to make sure you're paying a fair price so that they can work out how much equity you'll be putting down based on your deposit. So they need to make sure that the amount you're paying for it is a fair price.
Yeah.
And then the third one is the underwriting. So that is a human, normally at the lender, looking at your application. So they'll look at your documents, might go through your pay slips, bank statements, look at your information, make sure everything adds up, and make sure that they as a lender are comfortable giving you a mortgage.
Yeah.
Once all three of those have been done, the credit check, the valuation, and the underwriting, you will then get your mortgage offer. Cue confetti. Can we get some confetti?
Probably.
Yeah, we can get some confetti. At that point, that's your mortgage offer, which means that your mortgage has been fully agreed. So they'll issue that offer to you. And normally at that point, the mortgage work is done unless anything changes. Mortgage offers are valid for around 6 months, give or take.
Yep.
So that mortgage and offer will just sit there in the background whilst your solicitor completes all of the legal work. And then when they've done all of that, they will request the money from the lender to oversee completion of the purchase. I should say that the mortgage is normally agreed a lot quicker than the legal work, isn't it?
Yeah.
We don't want to, this will vary drastically. Mortgage on average might be agreed within a few weeks.
Yeah.
2-3 weeks,
Yeah.
but high street lender can be less, can be more, but I would say within a few weeks most people's mortgages are agreed. The legal work, so an average purchase of a house in the UK, about 4 months,
Yeah.
give or take.
Varies loads, doesn't it?
Can be less, can obviously be
Yeah.
more, but I'd say about 4 months if you just want kind of a loose time frame in your mind. So I guess let's move on to some of the jargon. So should we kind of talk them through what some of it means?
Okay.
There's a few different kind of bits of terminology that come up that a lot of people don't really understand or want kind of a bit of a better explanation. Why don't we start with LTV? You struggle with this one, don't you?
Loan to value. So this is the percentage of the property that is mortgaged. So percentage of the property that's mortgaged. So if you put down a 10% deposit, you'll be at 90% loan to value or LTV, because 90% of the property will be owned by the bank and you'll have owned 10% at that stage.
Yeah, correct. That kind of leads us on to the different kind of deposit increments. So you will need a deposit when you purchase a property. You might see the odd quirky scheme that suggests you don't, but often there's a catch. Those schemes come and go. We would say for most of you watching this video, do try and save a deposit. Generally, the minimum deposit is 5%.
Yep, generally.
Not every lender accepts that, and the 5% is generally the smallest. So with the smaller deposit comes higher interest rates, maybe fewer lenders to choose from, potentially stricter criteria, or they might not quite lend you as much, they won't be as generous. But with every 5% you put down, things tend to improve, don't they?
Yeah.
So if you get to a 10% deposit, then you'll find that better interest rates than the 5%. You get to 15%, 25%, 40%. The bigger the deposit you put down, the better things become. But we appreciate that that isn't possible for everyone, is it? So if you only have a 5-10% deposit, it still might be achievable, but again, make sure you explain that to your broker so that they can kind of talk you through your options and let you know what kind of interest rates you might be looking at.
The next one for me would be scheme, which I think we might have even said a couple of times. So scheme,
So
I'll go.
You go.
A scheme you'll often hear, probably already, or certainly will do soon, depending on how much you've done in terms of research so far. Do I take a fixed? Do I take a variable? What do they mean? So the scheme is the product, if you will, that you take. And that will be, generally a conversation between do you take a fixed rate or a variable rate, and then how long do you take the rate for?
that's probably the bigger question.
Yeah,
Isn't it?
normally most people seem to go for a fixed rate.
You don't
generally
have to,
speaking.
but a lot of people like the stability of a fix.
And then fixed rates generally are 2, 3 or 5 years. There are sometimes 1 year, there are sometimes 10, 15, 25 years, but generally 2, 3, 5 year fixes. And you are narrowing down what suits you and why. So the scheme would be a 2-year fix, a 5-year fix, a 2-year variable. Those are schemes.
So there'll be the economic decision. You know, you might find when you apply for a mortgage that one of those options might give you slightly lower interest rates than the other options. In which case that could be a kind of a factor towards your decision. It might be that there are kind of forecasts that interest rates might be expected to be coming down over the next few years or going up, again depending on when you're watching this video. So all of this from a financial aspect might dictate whether you go for a shorter scheme or a longer scheme, and your broker will obviously talk you through some of that, but also your personal plans. So for example, if you're only going to be in the property for 2 or 3 years before you reassess and potentially look to move house, then we wouldn't generally encourage you to go for a 5-year or a 10-year fix because you're tied in for that full scheme. It's not just the financial aspect, it's also what your real world plans are, and your broker will kind of talk you through that to basically advise you on what they think is going to be the best scheme for you. But like I said, it's sometimes called a scheme, sometimes called a product, sometimes called your interest rate. It's all the same thing really, it's just what type of scheme and interest you're going to move on to for the next few years, however many years that might be.
Easily gets confused with
term. So what's a term?
So term is the length of time you pay the entire mortgage back by.
Yeah.
So that's not likely to be 2 years or even 5 years. That, as I think Dan said right at the start, probably decades. So a lot of first-time buyers at the moment are taking lengthy terms, potentially 35 or even 40-year terms, which is generally the maximum. You can take them shorter, but that term is how long you get to pay it back for.
Yeah.
And that should be part of the conversation you have first up, as we've said, and you probably revisit that conversation once you actually find the property to know, right, I know how much I'm buying for, how much do I want, or how long do I want to pay this back over?
Yeah, because there are pros and cons to having a longer mortgage term. Obviously, the pro is by spreading out the debt, your mortgage payment will be lower, which obviously on the face of it looks great. But with that longer term, you will have a mortgage to an older age, and you will ultimately pay more interest because you're paying that mortgage over a longer period. Whereas on the flip side, a shorter mortgage term, payments are a bit higher, but you would ultimately pay less interest overall, and you'll have that mortgage clear quicker. So it's finding that balance. For some people, especially first-time buyers, you might start with a longer term just to keep your payments down if you're a bit overwhelmed with taking on your first mortgage, because you can always overpay or reduce the term in the future.
Yeah.
But on the flip side, we don't encourage people to take the term longer than you have to. If you think that you can afford the mortgage over a 25-year term, then don't just extend it to a 35-year term for the sake of it, because it might bring your payment down initially, but you will end up paying more overall. So the scheme and term are very different. The term is how long you spread the entire debt. The scheme is in the first few years of that debt, what type of interest rate and product are you going to start on?
Yeah.
What's next? Because I don't remember.
Fees or arrangement fees, just specifically arrangement fees, or lender arrangement fees.
Initially fees, and then we can arrangement fees, and then we can touch on
and
some of
then
the
there are
others.
more fees.
So arrangement fees sound horrible, don't they?
They do.
It sounds like, what,
Yeah.
lender's just going to charge another fee for the sake of it.
Yeah.
Kind of,
Yeah.
but in a way it does benefit a client, doesn't it?
You kind of, yeah.
And the reason being, lenders will generally offer you multiple different scheme options, so interest rates, and you can choose which one works best for you with obviously the assistance of your broker. A lender might have two different schemes. They'll have their absolute lowest interest rate that they can offer you based on your circumstances and your loan to value, but it will carry an arrangement fee, which typically can be £1,000, can sometimes be more, sometimes be less, but 1,000 is quite common. And then they'll have a scheme with a slightly higher interest rate, but potentially with no arrangement fee.
Yeah.
You can pick whichever one you want, but what generally determines which one is the best option is how big your mortgage is.
Yeah.
So if you've got a smaller mortgage, often it's not worth paying a fee to get the lower rate, because that £1,000 fee might only save you £400 in interest, so it's not worth it. In which case, go for the slightly higher rate. If your mortgage is a bit bigger, then it is worth paying the fee to get the lower interest rate, because you will ultimately save money across that initial scheme. Again, your broker will work that out for you, but it's just something to be mindful of. A few other costs.
That's across, yeah.
Valuation and survey, just to explain what that means. So the valuation, as we touch on, is the basic mortgage valuation that the lender is going to do. Normally free. Some lenders might charge you £100, give or take, but it's quite cheap. Survey, it's not mandatory, is it?
No.
If you want to organise a private kind of assessment of that property, because ultimately you are buying this property, it's going to become your problem if you do buy it. So if there are any major structural problems that a basic mortgage valuation misses, if you buy that property, those problems will become your problems as the new owner. So some people choose to kind of organise a private, more comprehensive survey. There are different levels to it, which is sensible, but obviously it comes at an extra cost, doesn't it?
Yeah, and it's always going to depend on the property. So again, it's another conversation. It's a theme. You always have the conversation with your broker about these things. You buy a brand new property that's literally just been built, you probably don't need an in-depth valuation or survey, sorry. If you buy a 1700s building with a thatched roof, then you probably want a pretty detailed survey on that. The more costly the further you go up the scale, more protection the further you go up the scale.
Yeah.
In short, really, I guess, isn't it?
Yeah. And then just the other people worry about how much is it going to cost me. Realistically, for most people, the main costs that are going to come up are your deposit, which obviously you budget for, and your legal costs. So the final one, your legal fees will vary depending on which solicitor you go for. How good the solicitor is a factor. Doesn't completely correlate, but often if you find the absolute dirt cheapest solicitor, you might not quite get the best service. Obviously, the type of property, if you're buying a flat rather than a house, legal costs can be a bit more expensive. If some of your deposit is coming from, a gift or from a lifetime ISA, there can be some additional costs there. The solicitor has to do some extra checks there. I would say if you budget around £2,500 for your legal work, you'll be there or thereabouts.
Yeah,
It will take
yeah,
to get, again, your broker can provide a quote for you normally. So that plus the deposit are going to be your two main costs.
Yeah.
Stamp, we don't give tax advice, but stamp
Yes.
duty might come up. So the stamp duty is a tax that some people pay when they buy a property, unless you're exempt. If you just go onto Google and just type in stamp duty calculator, put yourself in as a first-time buyer and put in how much you're looking to buy for, it will give you an idea of how much stamp duty you'll be liable for. But if you're looking at more expensive properties, stamp duty can be quite high. So make sure you check that. Again, your broker can give you kind of a good bit of guidance on what that might be.
Yeah.
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 The final bit of jargon, you might hear the terminology protection.
Yeah.
What is protection?
Protection, I guess, is an insurance, or insurance is. Protection is normally linked to things like life and illness insurance, which is an important part of the process. That again, your broker will talk you through what suits you, what fits in your budget, and that is its own little kind of conversations within the process there about what you should and shouldn't have. And maybe not under the same heading, home insurance. If you're buying a freehold house, you would need to insure the building as a mandatory insurance, which again, you'll need to do. Isn't too difficult to do, but you will need to do that at some point. So there are extra costs per month that you'll just need to figure out. It's not just my mortgage payment, but home insurance, potentially life, illness insurance, and that could be, all sorts of figures. It's hard to put a number on that because it really, really does depend on the individual circumstance.
Yeah, and just to touch on the protection, the life and illness insurance. So that's one that some people do take this really seriously and they understand the importance. And as far as we're concerned, it is extremely important, especially in line with the mortgage, to make sure if something happens to you, if you pass away, your family can clear the mortgage or maintain their costs. Or if you become ill, potentially can't work, again, you can maintain your food, your outgoings, your mortgage payment, potentially get private medical care if it helps you get better quicker. So it's really, really important. Your broker will kind of discuss that with you, but make sure you allow some room in your budget for those kind of insurances. If you go through and work out what your council tax is going to be and your utilities and your TV costs and that kind of stuff, do allow some room in your budget. But again, your broker will talk you through options to let you know roughly how much it's going to cost. I think that covers everything.
Yeah.
So, but just to summarize, and this is really, really important, everything we've just gone through has not been tailored to you. This is fairly generic, but before you start the process, you need to understand what is achievable for you or if there are any potential hurdles. So again, you can do that by speaking to a broker. Doesn't have to be us, but we would advise speaking to a broker before you start the process. And again, you can contact us if you do have any questions. We hope this was helpful and we will see you next time. Thanks a lot.